Hello and welcome to Trend Thursday. The question we always ask ourselves is, what trends are you riding? Now that would be a question for all of us here today. What trends are you riding? I mean, be willing to share. If you're practicing a paper money account, let us know. Now, just real quick as we get started, my name is James Boyd. We welcome all of you here today. This white shirt is for the Bears waving the white flag of surrender. Again, are those bulls actually taking over? Now, remember, the difference in our classes is, you can get people talking about the market, but they don't put any positions on. This class, we try to put a few positions on to talk about some of these trends and actually see what happens. The best way to learn is to practice. So let's actually do that here together today. Now, just real quick, also, as we get started, we got Connie Hill with us in the chat. We welcome her. You'll see her initials as CH. Now, quick reminder, Connie and I, we do post educational content on X. Connie will post her link there in the chat. Just click on it, follow her as well. And I do post educational content. Little fun here today, I guess. Maybe a little fun, okay? If you want to kind of see old JB, this picture of me and little Amber there. This is in Franklin, Tennessee, okay? And good times. All right, many more good years to come. Let's go ahead and get started. Now, remember with what we discussed here today, we'll talk about stocks, we'll talk about options. Also remember that options carry a high level of risk and are not suitable for all investors. Now, today we said we're going to talk about selecting, picking between option strategies. Now, not all of them, but the ones that we talked about, okay? And then question from JP or Josh Pink, next Tuesday. We'll talk about the in detail caller sample management next Tuesday. So we said today we're going to do selecting option strategies, okay, as we talk about trend trades. And we'll do application as we're going. Now, also remember that with what we discussed is done for general informational purposes only. You might take some of this information and say, interesting, but no thanks. Others might say, this interests me very much so. There you go. Now, also remember with what we discussed, we'll do our examples on the paper money software application. Investing involves risk. And also remember when we talk about short options, those can be assigned at any time up to expiration, okay? These are American style options that we're talking about, not European, okay, which is only at expiration. And also remember when we talk about examples, they are just that. Now, I'm going to take just a quick look at the market. I mean, very brief. Just want to see if any futures prices are actually hitting some brand new highs. Any? Did anyone see anything? Hi-ho silver? Oh, okay. Control ourselves. Now, the other thing we'll talk about kind of where the indexes are. Are the small caps, are they small or are they big caps now? Well, those small caps acting like big caps, okay? And we'll see if also some of any sectors may be setting up to potentially try to erupt higher. Let's talk about it just real quick. Okay, 5 minutes. Now, first off, let's start with silver. A couple years ago, my wife got these silver necklaces. She likes jewelry. I don't wear any jewelry. Okay. So the biggest sexy thing is, I don't know, when I see this price, it's making me think, geez, I wonder what those items might sell for. Okay. And it's not completely, let's say when those items were purchased, maybe silver was at 30. Okay, which wasn't too long ago. Now, by the way, this silver explosion happened right at Thanksgiving. Okay, talking about stuffing the turkey here. It went from 53, it's almost 100%. So, I mean, those holidays were very expensive if you weren't paying attention. There's been some opportunities. Now, if you take a look at, let's say, the gold, just super quick, gold actually hitting 49.10. When Kevin and I talked about 5,000 on gold, I mean, it kind of seemed like it was a little far away, but my gosh, I mean, you get one more maybe good night. I'm not saying it's happened tonight, tomorrow, what if it is at all. Man, 5,000, that's right there, okay? And so if you take a look at anything that also might be pushing, now, I won't get into currencies as much, but we've actually had some things going on with the U.S. as of lately, hence Greenland, European, fighting back and forth. There is some money moving around here. The U.S. dollar, getting the brunt of that push down here. Other currencies, as they sell the U.S. dollar, buying other currencies, such as what? The euro, the pound, the Australian dollar. the Swiss franc. Clearly, some people out there don't want to actually have as much as the US dollar as we are on the south side. Now, we'll talk about that more tomorrow, but I think that's very important to bring up. Now, remember, if the US dollar is actually down, some people might be playing precious metals, stocks individually, the sector. If we pull up IXB, the sector, we can't say this is just today because that's not true. The sector of basic materials, they could be playing if they said, I just want to trade stocks. They might just be buying gold itself, something that's trying to track the price of gold or silver, etc. Throw in copper as well. And they also might say, look, I want kind of something that's hard as well, maybe something liquid, such as energy. I think it is interesting to note here that when you look at the energy stocks, those also touch brand new highs, despite oil being where it is per barrel. You got to remember is it's not completely 100% correlated to the price per barrel. It's also, these are stocks that are correlated to the market. So you got to remember that. Would like to, well, I don't say that because I drive gas guzzling cars, but if you have energy stocks, you might say it'd be nice to see energy, crude oil prices going up a little bit to kind of more support the businesses, okay? Now, did I miss anything? Now, when we also pull up the big caps, I mean small caps, Russell, hello, okay? Now, you know, we've had some pretty big pulls here. This one, classic flag, a 2 to 3 week pullback, and then this monster ripper to the upside, okay? Now remember, the 10 period moving averages, they've been pretty good in terms of actually seeing that green shading. If we get the green shading, that actually means there's more net buying than selling, price hence pushing up. Today, we actually see the cross back to the upside, gap to the upside, and if we close here, it'll be the highest close we've actually had here. Now, the got to actually pull up the Dow Jones. Are we getting a push there? Now, remember, one of the kind of the most bullish patterns that we can see is, let's say, when something breaks below support and then snaps back to the upside. Ladies and gentlemen, boys and girls, that's what's happening on the Dow Jones. A lot of people say that's a bad sign. Well, yeah, it broke down. How long did it break down for? 1 day? So when you break down and then you see immediate buying back within probably 3 days or less, the stronger the chances that it could push back to the upside, like that drop never happened. And this is why people say don't overanalyze on daily charts. Look at weekly charts. And on the weekly chart, you're going to probably just see a big hammer bouncing back. So these large caps getting some benefit as well. You also got to remember some of these might benefit from a falling or a lower dollar as well. S&P 500, pull it up, same thing, same comment, okay? In terms of breakdown, snap back. We got above the 10 period moving average. I'm pointing at it. Second moving average we actually have is the 20 period moving average. We're right, trading above it. Probably the biggest interesting thing is the SOX. I'm getting so sick. No, I lie. No, we don't. We're not getting sick. Okay, I'm saying new high on semiconductors because that for some investors has been riding that trend. That trend has been pretty unreal. The NASDAQ, though, has not been unreal. It's been unreal, kind of boring, if you will, very sideways. It did break down, it snapped back, but it's been the lagger of the spaces. Super quick on, we already mentioned base materials. We do actually need to point out just briefly, communication, pretty good pushback on communication here today. We see discretionaries, pretty good snapback there. Keep an eye on Amazon, among others. Starbucks getting a push, but it's been a big intermediate downward trend. We see the transports, okay? Now, remember we kind of said before is that if the transports are hitting highs, if you actually see financials actually hitting highs and so on, it's probably going to be pretty tough to get a recession, okay? And if we actually pull this back to, let's say, industrials, that's not at a brand new high. Caterpillar, though, doink, you were waiting. Okay, there it is, okay? Let's see if we get a couple more doinks. Okay, there's two sectors I do want to pull out, though. Healthcare. When we pull up healthcare, this kind of looks like an ascending triangle that's taken a couple of weeks to form. But if healthcare shot to the upside, it probably wouldn't be that surprising. When we actually pull this up on the weekly chart, just quickly, we kind of see that longer term, it is in a what type of pattern? If you said continuation, correct answer. Nice, well done. And if you look at that, kind of shallow pullbacks, 1 week pullback, green, 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 1 week pullback, green, 1 week pullback, green. So if you're thinking the sellers are selling, they're trying to sell, just buyers, someone stepping in. Okay. Now, the other one I kind of want to make mention of just briefly is the Staples. Staples, 10 days ago, erupted to the upside. I mean, if you saw that in person, that was a pretty big move for Staples. Are we thinking that this is just going to fall over and just go back down to the downside? Maybe not. Could, maybe, perhaps. But, the steeper this upside move is, it leads us to think, could we make a higher plateau and try to go to the upside? Now, some people like different stocks, okay? Of course, if we're talking about Staples, we're talking about Walmarts, Coca-Colas, things like that. We can include Starbucks that might have a foot in discretionaries. But I think the area that some investors are probably watching a lot is healthcare and also Staples. The nice thing about these sectors, the investor might say, look, I'm not going to buy individual stocks. I want to buy maybe just the group in general. Well, come tomorrow, we'll talk about that, okay? 9:30 a.m. Eastern, and we'll bring that up with Kevin and myself. Now, I want to kind of pull up something just real quick to what we wanted to discuss. And so what I want to do is I want to kind of pull this up, and I want to, as we do this, as we talk through it, I want to come up with examples, okay? So I like to call this the delta scale. Delta is just really telling us the profit or loss, unrealized profit or loss, if the stock were to go up or down $1, okay? So if we said 0 delta, well, if the stock goes up or down $1, okay, well, if the delta, if we didn't have a position, I mean, that's what has 0 delta. It doesn't matter if it goes up and down because we're not in it, okay? So if we had a 0 delta, we would just say we're more insensitive to price movement, okay? So you're not really picking a direction there. You're more, well, you're picking not bullish or bearish, you're picking non-direction, okay? Let me just kind of write that there so we're just clear. Non-direction. When I say non-direction, I'm also saying flat, okay? Now, if we actually say, look, a delta of 100, clearly in this case, we're actually saying bullish, okay? Okay, just stampede. Now, we're going to talk about that just for a sec. Now, when I actually look at this, I always kind of think to myself, where's the VIX, okay? Second thing I want to actually put to this is what type of trend are we actually in? And so when I actually take a look at this, as investors do, got to put this right here. Let's start right here on the right-hand side. So if we said, hey, we're going to do like what strategy are we going to consider? So if we said delta of 100, what has a delta of 100 that we talked about? Stock, okay? Well, let me ask you a question, okay? When would you consider buying stock? When? Now, if I looked at this, okay, if we said, where is the VIX? So if someone says, look, I'm going to buy stocks, I'm going to write right here, they might dollar cost average if VIX greater than, okay, 18. Now, so that's someone like kind of buying on a dip, just like the other day when we actually bought Wells Fargo, okay? So when the VIX spiked above 18, they might dollar cost average on saying, hey, I'm going to try to use some recent bad news in the market to try to get in. But I think the language I want to say is they're probably dollar cost averaging. Maybe not a whole position, but they're trying to build a position, okay? Probably, I think for most investors, they're probably saying, James, I want to actually see something in this case where the VIX is below, I'm just going to say it like this, VIX is actually below 18, okay, and falling, okay? Now remember, if the VIX is below 18 and falling or staying low, okay, and I'll even put right here flat as well, that VIX flat, VIX flat in our current market is probably between, I don't know, 12 to 15, somewhere in that range. Now, what type of trends? Now, I'm going to say trend one, I'm going to asterisk that because that would be more dollar cost averaging. 2, 3, and 4. I'm also going to asterisk this one because if you're buying in trend 4 up near resistance, you're thinking that that price could actually ascend to the upside. It's going to break resistance. You don't know that, but that's what you're thinking. Now, the other thing I want to kind of point out here is, are there any notes we would actually make mention of this before we look at a trade example for just a moment? So when we actually say, well, why would someone even do stocks? Why? Okay, well, simple answer. Delta equals 1. So they want to actually get exposure to the trend that they think is going to go up. If someone said yesterday, I think AMD is going to go up, let's say they said, I'm going to buy the share. They were rewarded yesterday, okay? Big move. If we actually take a look at Intel, among others, if we actually said why, they want to invest capital. They're actually trying to put their capital to work. Why? Because they want dividends. Why? Because they want exposure. Why? Because they actually want no expiration. Okay? And they also want something where there's no option spreads, volatility, things like that. Okay, vol, etc. And the other thing is they're trying to use the stock to maybe actually do a covered call, CC, and they're also maybe trying to actually buy the stock to maybe actually do a legging collar. So when people say, I would never buy a stock because they know about options, I'm like, man, you don't do any covered calls? You don't get any dividends at all? You don't do any collars at all? None? You actually don't want exposure, a high sensitivity to direction, no expiration? Yeah, stocks are kind of important. Now, I'm not saying that everyone should do them, but they could play a role in many investors' portfolio. Now, let's actually move over here to the left. What is a strategy that we actually said that is very similar to actually stock? And the answer would be long, okay, synthetic. Now, what we're going to do is, if we said long synthetic, that delta we would probably say would be between 70 to 100. Now, it could be high. I mean, most of the long synthetics that we talk about, they're probably going to be about 85, 90, okay? If you say, I don't even know what a long synthetic is, it's a long call and a short put, 2 single option positions. And the answer is it's the exact same to what the stock is. So if we pick, let's say, a long synthetic, and say, why would I pick a long synthetic? Why? You probably already used up capital to buy stock. Okay? Now, and the other part of that is you actually want leverage, and you're probably thinking that this is going to be a shorter term trade. And I would actually say 2 to 3 weeks, okay, to 2 to 3 months, okay? And 2 to 3 months might be longer, okay? Probably a 2 to 3 weeks sweet spot, okay? Now, just really quick, okay? Now, I want to go over 2 more, and then we're going to look at our trade example. But these 2 very similar. Now, is there anyone else besides someone here that has ever said to yourself, James, it doesn't take a whole lot of money to go through all my money in buying stock? Has anyone ever had that personal revelation before? Like, James, it didn't take me very long. Now, I'm going to write right here, covered call. I'm also going to write here, let's say, married put, okay? Those are going to have pretty similar deltas to them. Now, the biggest actually thing when I actually say the covered call and the married put, we would actually put what type of trend there? 2, 3, 4, okay? I'll speak to that. If we actually said the VIX, I'm going to write CC, covered call. We probably want that VIX between 14 to 16. Why? Why would someone want that VIX between about 14 to 16? Well, in that case, it's because you want to actually get paid a premium. You really want to have the VIX high enough to get a decent premium, okay? Now, by the way, if you said cover call and married put, are they both bullish positions? The answer is yes. When we say the MP, the married put or protected put, etc., The married put, you might say, James, if I could get that VIX, okay, lower than 15, I would like that. Why? Well, because the lower that the VIX is, the cheaper that the puts are. The cheaper that the puts are, the lower the break even. And what you're going to notice is the less you pay for the put, the less the stock has to go up to break even. Okay. But so covered call is if you said, okay, VIX is at 12, I'm going to do a covered call. You're going to come back and say, well, there's no premium. I know. That's why a lot of people say, give me something in the neutral zone, 14 to 16 in the current market condition. If the VIX is below 15, the investor might say there's trends that are trending. And I actually, the puts are less expensive. Exactly. Okay. Now, I'm also going to kind of point something out right here, and I'm going to try to put a little extra column there. Something I want to kind of point out here is we would say IV, I'm going to include IV, let's say 25 to 34. That's the stock IV. On a married put, we would probably say 15 to 24. Because remember, if you're buying the put, you might like to see something where the IV is a little bit less. Okay? So when we talk about VIX, we're talking about general market conditions. When we're talking about IV, we're talking about stock volatility. Okay? Now, let's kind of go back. Let me actually just take this. Let's end on caller for just a moment because we're going to look at our first caller example that we needed to talk about because tomorrow Intel, or today actually Intel has earnings and we did a caller. The caller is really, so if we actually said, and I'm going to write this right above, we said covered call, married put, that would probably have about a 70 delta-ish. I'll put that in a different color so we could distinguish that, okay? Put that, let's go green. There we go. All right. Now, if we actually said, well, what about a caller? What does that have? That would probably actually have a delta probably between about 60 to 70, okay? 60 to 70. Now, when we actually did the collar, the biggest actually thing about a collar there is we'd probably want to see something. Remember, is the collar a bullish position? Yes. If we look at a collar, probably, let's say, VIX below 18 and falling. The biggest note that we would actually say on that is maybe upcoming, okay, earnings, like recently. The biggest actually thing is when we take a look at this is when we talk about the trends I'll label this as 2, 3, 4. Okay. Now, if you, for example, and I'm even going to put 1, you can do it, but if you have markets where they've gone down a lot, or the stock has gone down a lot, you're kind of capping yourself out early in a bounce back. Probably wouldn't be the favorite. Okay. Example, 2, 3, 4. Again, if you did it in 4, you're thinking it's going to continue to the upside on any bullish trade. Okay. 2s and 3s are big. 3 major because that's when the price is above both moving averages. Okay. So the biggest actually thing is if we looked at the current market and actually said, okay, VIX is where? Funny, we should ask the question. Well, if we go actually say, well, let's go back to kind of where we were just on Tuesday. Now, we saw on Tuesday, the VIX was above 18. Just hold on to that thought. That would probably trigger which strategy an investor might consider, if they would. Now, we fell down yesterday. We were below 18 yesterday. So some of the strategies that we actually talked about might make sense. And then where are we right now? Oh, here we are, kind of in that middle range, which is kind of what we've been talking about. So if we're kind of in the middle range here in the market, things like callers with upcoming earnings, in trends 2, 3, and 4, covered calls, married puts, it might depend upon what the IV is, okay? If that IV was between 25 and 34, probably would say a covered call. The IV was between 15 to 24, and the VIX is where it is, probably think about maybe are there opportunities to actually buy the stock and buy the put, okay? What type of trend is it in? If it's in trend 2, 3, and 4, bullish uptrend at this moment in time.
Now, what I want to do just real quick is let's take a look at one quick example that we actually have from the caller that we need to discuss. Now, you know that we've talked about Intel. That's not new. But what is new is kind of what's happening, what we need to discuss. Let me visually show you what this caller looks like, and then we're going to keep it going, okay? Now, here's the deal. You can have 42 different strategies, but if you don't know when to consider strategies at certain times based upon current market volatility and or the stock volatility, which also relates to trends as well, you feel like, I don't know what to look at, okay? So when we're talking about, let's say, selecting strategies, it really comes back to the VIX, market conditions, IV, stock volatility, which is a forecast of volatility, but also at the same time is what is the past, current, and forecasted trends, okay? So those two are big. Now, the big thing is, if we look at this, is we actually bought the shares at, let's just say we bought it at 38, okay? You good on that? And I need to know if we need to do anything. Let's say we bought it at 38, and we agreed to sell the shares at 42. Now, basic math here, not trying to trick anyone. So if we actually said in this case, hey, bought the shares at 38 and we agreed to sell them at 42, well, that would be $4 upside. That's not a trick, okay? Just basic math. Now, the question really becomes was from the transactions of selling the call, buying the put, was there a credit or a debit? Well, you got $1.78 and you paid $1.55. So really what you'd actually have in this case is 20 cents on top. So the maximum gain right there is $420. Are you with me? Now here's the thing. I'm trying to help you here, okay? How do you pick between strategies? Okay, well, that's what we're talking about. Number two, it's kind of showing a little application of this, and we need to talk about this because we got earnings. You're now going to see in this case is that was the $4 was between 38 to 42, $4. 20 cents was the difference between what you got on the call and the put, $420. Where are we now? Answer, we have 375 of the 420. How much more can you make? Answer, you can make another $45. Okay? Now, don't forget the strategy now. What percent of the maximum gain do you have? Yeah, but I got 29 more days. Maybe I should roll it. No, why did you do the trade? Why did you do the trade? I was trying to make $420. Well, the only way you make $420 is you go all the way to expiration. So if we take a look at this, if we currently have 375 divided by 420, we have 89% of the maximum gain. That is with 29 days to expiration. Now, how do you just take it all? You buy the callback, sell the put, and then also at the same time sell the shares. So what we're going to do on this Intel is we're going to grab this position, just take it off, not go over the earnings, okay? Now, so isn't that kind of nice? We don't have to worry about the expiration, right? When those percentages are there, we're just going to try to say, spank you very much. Right-click on those, create closing order, and the first thing we're going to do is going to try to get out of the option trades, okay? Where are the gains? The gains are on the shares, okay? Which is what you'd expect if the stock went up. I'm going to go confirm and send. Note the commission. Check. Send. Now, as soon as that position fills, then we're going to come in right here and then sell the shares of stock. Okay, so that's the first thing I want to do. Okay, we're going to watch in 2-3 minutes, see if it fills. If it doesn't, we'll move the price around a little bit and then sell the shares. Now, let's go back up. Okay, there it is. How do you sell the shares now? When in doubt, right click, create closing order, sell. Okay, click. Now that you might say, well, that was just chump change. Well, you gotta logically think through it. Okay, if we made $378 and this account before we did this position, let's say it was $41,000, this one caller almost moved the account 1% by itself. And it was a cap gain strategy. That one trade that was $50 or $37 when we bought it We're going to go ahead and actually say sell those shares. Notice there's no commission there. Send. We want to verify that trade fills. If it doesn't fill in the first 2-3 minutes, we'll go back and adjust it. But we don't want to forget about it. We see visual eyes. Okay, it filled. Done. Took it. Now let's go back to work. Now, one of the other strategies we actually talked about was a cash secured put, a C cash secured put. Now, notice if we go more to, let's say, a delta level of 0, we're really kind of playing more, let's say, higher VIX strategies. Okay? If we go over here to the right-hand side, it's really more about lower VIX strategies. Okay, so let's kind of think this through. So if, for example, if I said, okay, on cash secured puts, what do we really want the VIX to be? Do we want the VIX to be low? Let's logically think this through. Not necessarily. We probably want to see that VIX probably, let's say, 18 plus or high and falling. Now, again, can't say we haven't had opportunities. Just on Tuesday, we're sitting here right here at 20. When that VIX goes north above 18, some people say, look, you don't have to show me the chart. I just want to take the opposite side of the trade. I think it's going to mean revert. When volatility is high, it comes down. When the volatility is low, it could come up. It doesn't mean it does that tomorrow, the next day after that, etc. But they're saying, look, I think it's going to snap back to more of a middle range. Now, when we actually take a look at this, what type of, let's say, IV? Well, if we're talking about IV, the investor might say, James, the IV there on the stock, probably 25 to 35, okay, ish. Could they be higher than that? They could. But, if you start picking something where the IV is like 80, you got to be a little concerned because that cash secured put is, for example, it's the obligation to buy the stock. And if you sell a put on a stock that has an IV of 77 and the stock's going all over the place, you got to remember, you're on the line to buy the shares. I don't like it when you talk about responsibility. At our age, that's kind of what it's about. Okay, here it is. Now, trend. Now, we could do 1, but you got to remember, if you do that at 1, you're pretty comfortable that you're down near the support, which could be a moving average. It could be horizontal and or diagonal support. 2, which is a bullish type of trade. 3, and if you sell the put in 4, you could. You got to remember, if you're in trend 4 in the market, VIX is lower. VIX is lower, premiums are lower. Premium lower, higher break even. Okay, so it's not as rich as it was before. So if someone is trying to put it on 1 earliest, but they better be near a horizontal support we talked about. Also something where maybe there's a bullish MACD divergence, and you're really probably more in 2 and 3. You got to remember something, trend 2 and 3, that's the sweet spot of the trend. The problem when you talk about trends is you never know ahead of time. Boy, wouldn't it be nice if you knew ahead of time? You knew ahead of time how long those trends were going to last. You just don't know, okay? That's why you just try to ride the ones that you see. Now, super quick as we finish this and do some positions, I'm going to put in right here the long call vertical and the short put vertical, okay? Right there. Now, let me mark that. All right, now this is not new, okay? When we talked about short put vertical, we mentioned this was more about probability. This was more about profitability. This was more about probability. So prob for probability, prof or profitability right there. Now, if we kind of said, what might the investor like, let's say, on the cash secured put? How does it relate to the short put? The answer is the same. What type of trend? The answer is the same. But why would someone actually do a short put vertical, okay, and versus a cash secured put? Well, number one is they want defined risk. Number one, how many of you have ever seen the VIX go up like on Monday and you said, but I don't know if it's really going to hold? I mean, what if I get it and it keeps going down? Have you ever thought that? Be honest with me. If you haven't, you're not telling me the truth. Okay. I have. Okay. The investor who sees the VIX shooting to the upside like on Monday, they're probably going to be saying, James, if that VIX is north above 18, maybe for some investors, the number one strategy they might say is, James, I'm doing short put verticals. I'm going to try to get in when the volatility is high, premium is high, break even's lower. Before long call verticals, before short cash secured puts. Because they're saying, look, if I take the chances, at least there's defined risk. So between short put verticals and cash secured puts, which one's safer? Safer? Short put vertical. Because you have the downside protection. Cash secured put, you sold the put, and the risk is all the way down to zero unless you buy an out of the money put. Okay? Now, let's actually kind of take this back a little bit, control ourselves, okay? Let's just kind of go back to this, okay? Now, when we talk about long call vertical, you got to remember something is, what do you probably want to see the VIX doing? Well, it's like the more profitable type strategies. What do you mean by that? Well, what we mean by that, and let's go back to something. It kind of covered up my, let's move that over. Okay, well, let's put this back. Okay, there you go. Now, if we went back, just want to double check. Yeah, 2, 3, 4. Okay. So the biggest actually thing is when we said short put vertical, long call vertical, both of these were more higher priced stocks. When we said that, we probably said $200 to $300 stocks, okay, that had tight bid ask spreads. Now, when we talk about doing cash secured puts, you got to remember is if you sell the put, you have the obligation to buy the shares. So you got to ask yourself, this might need to be, you need to be thinking if I had to buy shares, you're stock price sensitive. So if you came in and said, man, is it a good idea to sell a put on Goldman Sachs? Yeah, if you have $1 million, okay. Why? Well, because Goldman Sachs is really at $1,000 a share. So why did I say $1 million? Well, let's say it's $100,000 to buy 100 shares of Goldman Sachs, whatever. That would be 10% of the account value. That would kind of be on that same framework of what we're talking about. I'm not giving a recommendation. I'm just saying you have to think about if I buy those 100 shares, what percent of the account is it? If it's more than 10%, red flags are going up of like you're taking a very big position, okay? Now, are there any questions with this? Now, I want to kind of so let me kind of just test you a little bit. And I like to kind of do this, okay? This is where I have fun. Now, speaking of actually a couple of examples, okay? But this is like, you know, when I pull, so I'm going to pull up a stock. Let's go to CVNA just real quick, okay? Let's try to use this grid. Okay, so first off, $475. Sell the put. Well, can you buy $47,000 worth of stock? No. Okay, well, this is not going to be a stock position. Okay. Do you want to play more probability or profitability? Well, I like profitability, but I do like defined risk too. Okay, so first off, what you're going to notice here is if we said, I think all of us would agree a bullish position, okay? If we said buy, let's say, should I do a cover call? Can you buy 100 shares? No. Okay. Could you could you buy some shares and just not have 100? You could. Okay. So if it's a high price dollar stock, you can buy shares. But if you can't buy at least 40 shares, you're probably not doing a married put. You cannot do a cover call because it's not covered. So this one is really out. That caller's out. You could buy some shares of the stock if the investor said I bought 12 shares or dollar. You just said I just did a small position. Fine. If you actually did a long synthetic, you're still selling the put, which means you have an obligation, and that you do a cash secured put. That's an obligation to buy 100 shares of stock. So all of a sudden, bulk majority of these come off the table immediately. When you have higher price dollar stocks, $200 to $300 plus, that's why a lot of investors in the current marketplace or have done or currently are maybe considering a lot of vertical type trades. Now, if I pull this up, CVNA, we don't know what the volatility is like. Let's pull it up. So if I go to the trade tab just real quick and I said, okay, CVNA, what's the implied volatility like? Well, with earnings coming up, it is high. Now, long call vertical, short put vertical. Well, higher the volatility, they might say, I like to maybe sell something, okay? If we go to, let's say, the February expiration, the one thing that we don't know is, can I actually do this? Now, why would someone say, I'd rather buy some shares than maybe do an option? Well, you come to the option table and you're saying these spreads are like, say, $2 wide. So when we went down the path of saying, some of these strategies, we said we could try to buy some shares, can do a cover call, can't sell the put, can't do a can't do a cover call, things like that, need 100 shares. When I look to do, let's say, a vertical, short put, long call vertical, spreads are too wide. What's the only strategy left on the table here? Answer, buying some shares. Now, this goes back to the reality, okay? I know reality hits us in the face here. If we said, look, we're going to buy the shares, the spread there between bid and ask is actually 40 cents. We said on these options, we like to see spreads of 20 cents or narrower. Worst, maybe $1. Worst, this is even worse than that. So it's kind of depleting some of the strategies that we might consider, at least on this example. We're going to go buy custom with OCO bracket. And now what we're going to do in this case is I'm going to go back to the dollar amount there. If we said, hey, James, I could put together maybe, let's say, $7,500 worth of stock, no more than X amount, 5 to 8% of the portfolio value. How many shares is it going to be? 15 shares. So this, it does give us the opportunity to buy some, but it's not 100 to do a cover call or a caller, and it's not enough to do a married put because the delta in the put would be bigger than the delta that you have on the shares. Okay? So you kind of, and by looking at the option spread, the investor could do an option, but these spreads are quite wide. The key word is currently. Now, when we look at, let's say, let's go back to the chart, where do we see that support? The trend line underneath us is probably about right here, okay? 450-ish. Now, if we actually said 450, less 2%, that's going to be 441. If I actually put that right there, 441, there, and if I said maybe potential target in closing here, what might be the target if it were to go to the upside? Well, we don't know if it's going to do that, but some might measure from here to here, which that measurement is about 68. Some might actually measure more conservative measurement there to there. It's about 34. If we said, James, I'm going to take a more conservative measurement, it's really going to be about a first target of about 505. That's the second measurement, not as wide, which means the target is not as big. So I want to go back because this is the purpose of today's class. When we talk about picking between different strategies, of the sample plans that we talked about, we walked through an example given Carvana. And we said, okay, here are the strategies that we might consider. And as we walked through a couple of these, we said, some of these, it's going to probably come down to one or two typically. We said, we're going to try to focus over here. But when we came to the option strategies, the option spread, it's just too wide. And the only strategy really left is stock, at least if we're talking about the strategies that we talked about. Now, your homework is I want you to go out and say, how to use VIX, how to use the type of trend to help determine the type of strategy. Okay? I'm out of my time here. Now, remember, when we talk about these strategies, we're looking for option spread width, okay, less than 20 cents. Okay, $1 max. That's not new, okay? But when we look at, let's say, doing verticals, we talk about getting narrow spreads, okay? So was this helpful? But these are the things that are going through my mind. So when you say, how do you pick certain strategies? This is what's going through my mind. Where's the VIX? What type of trend are we in? Okay. And obviously stocks really play a big consideration given that we actually don't have expiration. So I'm out of my time here today. I want to say thanks to Connie for answering those questions in chat. I'll be back on tomorrow morning with Kevin at 9:30 a.m. Eastern. It is live only, so join us live. Thanks to Connie. Thanks to all of you. Next Tuesday, we'll talk about caller management steps in detail with pictures. And with that said, that will be kind of what we talked about in terms of kicking off 2026. Speaking of kicking off, there's been a lot of things have been kicking off in terms of a trend. So this class, as we talk about the trend, is kind of important. So with that said, stay tuned for our next webcast coming up right at the top of the hour. It's been a pleasure here today to talk about picking strategies. With that said, take care. Bye-bye.